Well, thank you for joining us here. My name is John Sluice, and I am coming to you mid-tax season. We are in the thick of it. Wanted to bring a few items that we're seeing here, what we're noticing from what we've already incurred, and then just a little look ahead here for those of you that are still going to be planning on coming in. It is sunny outside here, which is a really nice change here to see, and is definitely increasing the spirits here as we go through. Definitely starting to see tax documents coming in. I would recommend, if you have not brought in your tax documents to us, please do so soon. Even if you don't have all of everything, right? A lot of individuals are waiting for maybe that 1099 from their investment advisor. Bring us what you have, and we can at least get things going, because we are seeing significant compression happening again this year, especially with those new tax law changes. Things are coming out later as they're working their way through. So definitely want to bring in to at least get it started, and then we can put it down to a few items that are remaining, and make sure we have things in place. So with that, bring your documents in, send them to us. Talk to Lori or Jessica at the front desk. They can certainly help you getting some documents. Come on in, drop it off. We're welcome to see you. It's always a good opportunity to see you as well. For those of you that are waiting to bring in your documents, keep in mind that we do have a deadline there for March 23rd, or as I'm telling people, before spring break. So before you leave for spring break, make sure you have your documents in. We do need time to work our way through these, and if we don't get them before that time, it makes it very difficult for us to be able to get a return done before the deadline. So please bring your documents in as soon as possible and by that deadline. Perhaps the biggest thing that we're noticing here, and we did anticipate this, but it's the one big beautiful bill, the full impacts that are coming through. In the good way, we are seeing that most clients, and I would actually dare say, I would say almost all of our clients are seeing benefits from them. It's what we anticipated, but it is a welcome treat for many. It's not gigantic benefits for most, but we are seeing individuals getting the benefit. And it ranges between $300 up to $2,000 or $3,000 that we're seeing. So it's kind of a nice thing that we're able to talk through. For many of you, it's the senior deduction and or the S.A.L.T deduction, the state and local income taxes. Because many of you are now starting to qualify for the state and local income tax expansion, don't be surprised if we reach out to ask you for your property taxes and things that we haven't done in a while. So I'm not saying necessarily you have to bring it in originally, unless we've talked about it already, but just don't be surprised if we do reach out and ask. That's why, because we're seeing that expansion, and that's opening up for other items for many as well. For those of you that have tips and overtime, that has now definitely some preferential treatment here for income tax purposes, and so we are definitely asking on those. Let us know, because the information is not necessarily on your W-2. Oftentimes we have to follow up with statements or final pay stubs or otherwise, so let us know if you do have that, because we may not know to ask. We are trying to ask for it, but if you have tips or overtime, let us know that and put it on the organizer so we can be watching out for it as well. I'm going to do a quick reminder here for the IP PIN. If you had one of those last year, make sure you're watching out for them. We cannot file your tax return without it. Again, I'm not saying if you don't have one, or if you have no idea what I'm talking about, that probably doesn't apply to you. But if you do have an IP PIN, or we've talked about it with you in the past, that's an identity protection PIN. We have a whole video, we'll put it in the link below, on how to grab it and how to get it. But if you don't have it, we cannot do your tax return, and so please get that sooner than later. For those of you in Michigan, we are continuing to see the benefits for the retirees on the increased deduction that's allowed for retirement benefits, which is pretty exciting to see. Almost all retirees now are tax-free in Michigan. And I say almost because there are certain ones that are not, so don't hear me say 100% is, but we are noticing that it is fully phasing in, and we're at this final year here of the phase-ins, or the second final year of phasing in on this. And so we are seeing it, and especially where we're impacting it for withholdings in 2026. And so one of the things we're talking with our clients about, and talking with you about, is adjusting or possibly adjusting your withholdings from your current year draws that you're doing from your retirement account. That if they've had withholdings done in the past, that maybe we can adjust that down, which is some exciting news. When we're seeing all the costs of everything go up, it's kind of a welcome adjustment coming back to us. So that's a nice thing. For those of you that are in business currently, we had some things that came as a surprise for many, that as a result of the one big beautiful bill, hard to believe, but just because the federal government does it doesn't mean that the states are going to follow behind. And the state of Michigan and many other states are definitely pushing back on this, and they are starting to do what's called decoupling. So if you hear me use the word decouple, that it's not, the Michigan is assuming, or not saying that just because the federal government does something doesn't mean we're going to do that. We're seeing that in bonus depreciation. So you've probably heard that in the news, where if you go and buy something, you can take 100% deduction the first year you buy it. Michigan said, yeah, no, we're not going to follow that. We're going to go back to the other laws that were in place before. And so we're having to make decisions of, do we want to account for that or not, and what are the implications of it? So I mentioned here only as just a precursor to it. So you might hear us talk about decoupling with you. And if you do, that's kind of what we're referring to. Looking ahead, as a reminder, Secure 2.0 changed the catch-up contributions for those that make more than $150,000 in wages. So if in 2025 your wage was greater than $150,000, your catch-up contribution must be in a Roth. So please make sure that what you're making in now, like this is your paycheck, next week, the following week, that those have to be accounted for properly. And a lot of people aren't necessarily thinking about it because it's not in place until 2026. And so we're not going to have that when we're talking about it until say the end of the year. But we're trying to be proactive here and making sure you know that if you made more than $150,000 in wages in 2025, your catch-up contribution must be in a Roth for a 401k. So please keep that in mind as you're looking at your current year items. And then lastly, and you've heard me talk about this extensively on all of my videos, is we are seeing the absolute importance of tax planning. Because of the compression coming in, it's almost a must for us to be able to meet off year end, to be able to know and plan on what's coming, because this last little bit here is so much of a compression, so much of just getting it in, that we can't do what the really value add items that we do, which is on the tax planning side of things. Because for often, and for many, it's too late to do these things. And so one of the things that we're starting to do here is really push that planning and proactively get them scheduled. So it's why I bring it up here. So don't be surprised if Lori or Jessica, as part of the checkout process here of the returns, we're trying to schedule some of these right away and right now. Think of it almost like your dentist, right? You schedule your 6-month filling way in advance. You may not know all the schedules and the details of it, but that's what we're trying to get in place because the tax planning is so important and it's almost a must. We have 2 of them for the individuals here in the realm that are listening here. Generally speaking, we have the summer ones, and that's where we're going to be talking more on the bigger picture, the structural items, such as wills and estates, family giving, gifting to the kids, more life event type driven items. And then the one in the fall tends to be more of the more tactical items of, okay, here's where my returns are, here's what my investments are, what am I doing, am I up to speed on my estimates and otherwise. So your tax preparer will talk to you individually and say, okay, here's what we think we should do on your specific item, but I bring it up here so that way you're not surprised if they're asking you what it is. And don't worry on the scheduling wise. Think of it like your doctors, your annual physical, your 6-month out. Let's get it on the schedule, and then at least we know that it's there, and then we can touch base come the after tax season. So thank you for joining us here at this mid-tax season update. As always, if you have questions, please don't hesitate to give us a call or an email. We're doing everything we can to get returns out. Things are going efficiently, and I'm looking forward to talking to you here very soon. Thanks for joining.